Hello, everyone. Welcome to the fifth episode in our series of conversations on From Startup to Scale Up. Today, I wear not just my RevUp hat, but also my hat as a co founder of Jamaica's first and only operational angel investor network, First Angels JA, and as an investor in 13 startups. So, my guest for this episode is my friend Pieter Dorsman, who is in Vancouver, Canada. Pieter is a seasoned angel investor, advisor, and mentor who is president and CEO of Redpeaks Management Inc., which is a consulting firm focused on advising technology companies on capital raising and M&A and restructuring activities. Pieter is also a director and CFO at eFund, a Vancouver-based seed stage investment fund, which has invested in 42 tech companies to date. Since 2018, he has been an owner and director of Vancouver's Angel Forum. Pieter will be the main presenter in a series of 3-hour webinars that RevUp is going to be hosting, and I will be his sidekick, so to speak. So if you are interested in learning more about angel investing in the Caribbean and you haven't yet registered, please hurry and go to angels.revupcaribbean.com to register today. Pieter and I would love to see you there. So Pieter, welcome. I'm thrilled to be talking to you today. How are you doing?
I'm doing very well, Sandra.
How is the weather in Vancouver? I hope it's not hot like it is in Kingston, Jamaica.
It's hot by Vancouver standards. It's 25 degrees and sunny. So it's a very dry summer here. It's the third very dry summer in a row. So
yes. So Pieter, you were one of the angels that supported First Angels JA when we just started. And I recall you coming here to do some workshops with us, and you've been active in this space for many, many years. So let me start by asking you, what motivated you to become an angel investor?
Well, I came to North America after a career in international banking, which took me to London and Hong Kong. And after that was sort of coming to an end, I had the idea of getting involved in technology because that was taking off. This was around 2000. But I didn't know how to get involved. And I moved to Canada, and you saw, a rapid emergence of an ecosystem around software, biotech, clean tech in its early days. And I just stepped into it using my financial skills, like how can I work with companies? Can I advise them? Can I help them? What can I learn about it? And before you know it, it becomes pretty clear what they need. They need capital. They need money. So I wasn't planning to start investing in companies. In fact, I'm pretty conservative with my money. So it was sort of quite a journey to get into it. But at some point I thought, well, why don't I start investing in companies and build up a portfolio across a number of industries, but at the same time work with these companies, because I think, and that is sort of an essential piece. Like in order to ensure that these investments become successful, these companies need more than just capital. They need support, they need advice, they need a network. So what I do is basically a combination of both. And over the years, that is a business that has grown exponentially. Acquiring the Angel Forum, which is Western Canada's largest angel group, starting a fund, and the thesis is the same around it. You invest your money, but it's supposed to be smart money. You work with the companies to get them to a point where we can all be successful, the founders and the investors alike.
Yeah. So let me just dispel you sort of, I hear a lot of people talking about, angels as VCs. Is there a difference between an angel investor and a VC?
Yeah, there's a huge difference, and the difference is stage, right? So angel investors come in at the early stage once a technology is not fully proven. It's as a piece of biotech or a piece of software. They're still working on it. It may be just getting ready. You have some early clients. And that's where the risk is the highest, and that's where angels step in. And because the risk is the highest, the price is low, right? So it's once that a product or a company is de-risked and it's made progress, it's having sales, it's having traction, it's growing, That's the stage when venture capitalists, when VCs come in, and then they deploy larger amounts of capital, saying, "Hey, there's a piece of software here that's growing fast. If we put like $10 million in, we can make it a $100 million company." Whereas angels invest at like $1-2 million, right? And let's hope we can get to the stage where we can attract VC capital or become cash flow positive, which happens a lot too. So
Yeah,
that's the difference. It's stage.
yeah, and there's also a big difference between the number of deals, that
Mhm.
angels do a lot more deals than VCs, I would imagine.
And that's right, because the fail ratio is higher. So you need to invest more because, I would say at least 10-20%, will go nowhere. So you have to compensate for that and build a portfolio to have a certain success rate.
Right. So, Peter, you have interacted with many, many angel investors. Is there a typical profile of an angel investor?
No, not at all. In fact, earlier this week I had breakfast with one of Vancouver's most legendary angel investors, and I think he's in his 70s, maybe 80s even. And he only gets involved in companies. He doesn't care about the money that much more, right? He has made his money, so he only gets involved in companies that have a real impact on society. It was a real urgent problem, and in this case, it was a medical device company where he said, "Peter, this is a problem that is growing like crazy in hospitals across the world, and this needs to be solved, and this is why I'm getting involved." So he's not interested in the financial return; he's interested in impact. Another person who's a member of our angel network, he said, "Peter, I don't do it for the money. I just like to work with young founders. I want to share my expertise. I have tons of fun doing it." But by the same token, there are people who purely are in it for the money, right? They said, I'm building a business, I'm building a portfolio. I need to see financial returns. So there are very different sets of angel investors. They come from different backgrounds. Some have made their money in technology, some have made their money in real estate. Some are just professionals like lawyers or uh, doctors who have some spare cash and want to get involved and want to see a financial return. So they're from all different directions, different motivations. And yeah, that's how I would summarize it. So that makes it also a very interesting group of people.
Yeah, and I'd say that really indicates a lot what our network looks like. A lot of
Mm,
people who are really just in it to support the community, the startup community. And there are others who have never invested, but they're
mm,
interested in supporting the ecosystem. So, yeah,
right.
you just mentioned being a co founder of Angel Forum.
Mm.
Um, Tell us about Angel Forum and how it serves both the startup community and angel investors.
Yeah, so the Angel Forum has been around for a long time, and the person who founded it, he retired, so we took it over. I took it over with my wife, Irene, who's running it on a day-to-day basis. And it's basically an organization that organizes events where angel investors come together and listen to pitches from founders. It's sort of a connecting capital to investors. But what we've done is we've built it out to also offer education, to offer bigger events like multi-day conferences in different locations. And what we've really changed is since we took it over, because it was a bit done in an old-fashioned, old boys network thing. We've tried to include more women, immigrants, and also make it far more focused on the founder, right? Because there was this adversarial thing like, "Oh, we are the guys with the money. You listen to us." When they
Yeah.
talk to founders, that's not the way it is. You have to build relationships, right? You have to work together. So we've changed the culture quite a bit, and it's been quite successful in attracting founders from all directions. In Canada, we have so many immigrants coming in, and they need support, right? They have a company, they have something interesting that can get financed. We help them get ready, and then we let them pitch at one of our events, and we've seen really good results coming out of that. And it comes also with collaboration with some funds. We have interesting speakers, so we really try to give the ecosystem a push where we can create successful deals, more successful deals over time.
Okay. So, the Caribbean region has very limited experience in angel investing. So, do you think that joining a network like First Angels, Jay, is the way to go? What would you say are the pros and cons of being in a network?
No, I think that primarily pros, because as an angel investor on your own, it can be hard, right? You don't have all the knowledge very often. You're a minority shareholder, so your rights are not always protected. So if you can collaborate with others in doing due diligence, working with founders, comparing notes, you sort of, I think you will have a much better experience, and you can participate in the group investments and build a portfolio much quicker and learn from others. And you learn to invest in other deals. Some people have a software background, some people have a consumer retail background, some people have a biotech background. And if you collaborate, you can jointly work on deals together and then determine who will help the company once an investment is made out of that group. And I think it's proven, in fact, there's scientific research, and our fund is based on that thesis, that if angel investors collaborate in doing deals, they're going to get better results, in
Yeah.
particular when it comes to doing the due diligence. So, and that's also why we do education at Angel Firm, because I want to have new angel investors have a good experience. There's lots of people who have made money, say, Peter, I want to become an angel investor. Then they make an investment, and because it's high risk, it may go wrong, and then they lose, and they say, I'm never going to do that again. I'm going to go back to real
Right.
estate. So we want people to have a good experience. So joining a group is actually very beneficial in that process.
Yeah, and I would imagine just even the cost of doing due diligence, you
Hmm.
know, if you are doing it on your own, and having
Exactly.
to hire professionals to help
Yeah.
you figure out what the deal might look like. Yeah.
Yeah.
So let's talk about deal flow because in the
Mm.
Caribbean, we face the challenge of creating good deal flow. What
Mm.
should we be doing to find and support quality deals for our members to invest in?
Yeah, so that, in Canada, we don't have that problem. We have lots of deals coming in. And I alluded to it a little bit in one of my earlier answers, Sandra, is that we have a lot of immigrants, right? So, and immigrants, they want to work hard, they have IDs. So it may be an idea for the Caribbean to start attracting people from other regions, people from Europe, people from Latin America, and create an environment where people want to live and people want to start new businesses, right? So there's a big piece that comes down on the government, in my opinion, by providing a framework where people will start to create companies through whether it's immigration, tax regulations, grants, subsidies. And the Canadian government has done a great job in fostering that ecosystem, right? So, and then all of a sudden you see an explosion in deals coming at you. We have great universities here. A lot of these, I teach a class at university. Uh, Most of the students there are immigrants, and most of them will start a company coming out of it. So these are all graduates in science, and they have their projects, and they will move on and become entrepreneurs that start companies. So I think if you want to have a better deal flow, it will have to be collaboration with multiple organizations, in particular the government, to see how can we improve the entrepreneurial environment in our country, or in your case, in the entire Caribbean region. So I would think you'd have to collaborate with other countries across the region.
Yeah, I have to give a plug to one of our sponsors of the Angel series, the Development Bank of Jamaica. They've been doing a really great job supporting not just accelerators and founders, but angel networks. And, it's interesting what you said about immigrants because, I've been to Chile. I went to visit Startup Chile some years ago, and the Chilean government has actually done this. They have provided incentives for people to migrate to Chile or
Mhm.
to come to live in Chile even for a
Mhm.
time to start a business. So I think it's something our governments should think about. And I believe Barbados,
Mhm.
in the course of the pandemic, has created a special class of residency for
Mhm.
people to come to live and work in Barbados. So that's something we really ought to look at. So, Peter, let's talk about deals now. Um,
Mhm.
what are you looking for in an opportunity to invest?
Mhm.
As an angel investor, what are you looking for when you make a decision to invest?
Well, there's a whole list that I'm going to go through at the event as well. This the standard things like very interesting technology. It has to have a potential for a big market. It has to be competitive. All of these things are pretty key for an investment. But the single most important thing I emphasize always is the people. So actually, it's like a marriage. You fall in love with someone. You fall in love with an entrepreneur. You go like,
Yeah.
hey, this guy or this girl is so committed to what he or she is doing. They have built something interesting, and you can see in the character of the person that if it doesn't work out, they will pivot. They will go through a brick wall and come up with something else to make it succeed. We've just recently invested in, actually, she's a woman who came from Brazil. She's got a biotech company here in the Vancouver area. And, I'm not a biotech expert by any means, but getting to know her over a period of time, working with her, you know, really impressed. And you think this is going to go somewhere, right? So what we
Yeah.
do then, we made an investment with our group, but we brought in some of the biotech people to look at the biotech aspects. But I knew pretty much that we were going to, if that checked out, we were going to make an investment because of her, because she was the
Yeah.
driving force between. And that is what you can ask most angel investors, and they will give you this answer. It's a people's business, and it's finding the rock stars of tomorrow. In simple terms,
Yeah, I
with whom
know.
you.
Yeah, I mean, and this is something we have talked about in our group as well. We're really interested in who is this founder.
Mhm,
And as you say, yeah, it's a long-term partnership, eh?
mhm,
So
mhm.
it's really important to be able to like the person, to be able to
Yeah,
get along with them, to
yeah,
communicate effectively. Absolutely.
exactly. Yeah.
Yeah. So on the other hand, what should founders looking for angel investments do to successfully engage an investor?
Yeah, so that is what I always tell founders is you need to start early. Actually, you need to start talking to investors at the time when you don't even need the money yet because you're so early. But you're going to say, look, I'm working on something. I plan to launch a new company or technology. I'm just doing some informational interviews. Can I buy you a beer? Can I buy you a coffee? And just get out there in the community so that
Yeah.
people get to know you. Because once you're ready to take in the investment, people know who you are. They've seen you in action. And sometimes it can be 6 months ahead of time or 12 months, but then people can see how you progress. And I always say, and
Right.
a lot of founders do that now, just put out a news release every now and then or a newsletter. Just send around what you've been up to. Create sort of an ecosystem of supporters who like you, who have not put money in your company, but they may want to do that once they've seen you operate over a period of time.
Yeah.
So I very much hammer on the relationship building part of the whole thing.
Yeah, absolutely. Relationships are the key.
Mm,
So, Jamaica has been described as a low trust society.
mhm.
It's taken us a long time to get to the point where founders can trust somebody to come into their business. And I suspect it's much the same in the rest of the Caribbean. There's sort of been a feeling that if I share too much, somebody is going to steal my idea. You know, how do
Mhm.
you suggest angels or angel networks should build trust with founders who approach them?
Yeah, I think it's a matter of reputation. I always tell founders, all these angel investors are really interviewing you, taking your business apart, wanting to know everything before they invest. But you should do the same thing to angel investors. Like, who are these people? What are their backgrounds? What have they invested in before? Just do some background checks. That's also part of the relationship building. When you hang out with someone for a longer period of time, you know what they're like. You ask around. And, we have that same issue with some founders here in Canada who are very nervous about, in particular when there's a lot of intellectual property to disclose it. And I said, the investment community is relatively small. Most people will know each other. Most people will able to help you, connect you, do background checks. So it's a bit of that. And
Yeah.
yeah, I've never in my 25 years doing this seen someone steal IP and start a new company. Right,
Yeah.
because again, it comes down to the founder. I mean, I can steal someone's IP, but I don't have the skill set to
To
commercialize
execute
it.
on that.
Yeah, exactly. So it comes
So,
down to execution. So
yeah.
it's I understand the worry, but I think it's a manageable worry for and in Jamaica and the Caribbean, which it's a relatively small community too. I mean, most of you will know one another and connect with one another. So I think it's a manageable issue.
Yeah, I really totally agree with you on, and we have worked hard to build a good reputation.
Mm,
So I think it really does come down to that. And the idea that you can do your own due diligence, it's just
yeah,
not a one-way street at all,
exactly. Yeah.
you know. So let's talk about negotiation. Uh, how much negotiation is typical, when trying to close a deal with an angel investor?
Well, actually, it should be very short, right? When I advise founders, I say, what you should do is put a term sheet together and say, this is, how we're raising money, and just see what the response is from angel investors. Sometimes founders say, well, we want the angels to present a term sheet to us to set the terms, a seasoned investor, and then the angel investor should put a sheet together. So it can go both ways. In both cases, the negotiation, in my experience, is very short. It's very relatively short. It's not a very difficult thing.
Yeah,
In terms of putting that together. Plus, if it's going to be a long negotiation, it's usually a red flag. If you're going to have endless haggling over the valuation, whether it should be 4.5 or 5.5 or 4.9, it doesn't matter in the scheme of things, right?
yeah,
Get over it. You should be working together. The
yeah,
negotiation should be very short, and then the angel and the founder should get to the same side of the table and work hard to make it a success.
yeah, yeah, yeah. So let's talk about your own portfolio, Peter. I think you said you invested in 49 companies, or you have done 49 deals.
Well, for myself, I think it's around 20 now, and I think with
Oh,
the fund,
that
we
was
just
that
hit
was the fund.
43 actually,
Yes. Yeah.
as of last week.
Okay.
43 with the fund and
Okay.
20 for myself.
Yes.
So yeah, it's a pretty diverse portfolio, and it's across all industry sectors. So with the fund, we do software, hardware, biotech, clean tech. For myself, it's mostly software, and I've got one or two clean tech companies in there.
And what is the deal structure that you prefer?
There's four type of deal structures, right? It's a common share, preferred share, a convertible, or a safe, which is a simple agreement for future equity. The best thing for investors is always a preferred shares, right? Because you have a preferred position. But it depends on the situation, and I will talk a lot about that in the course that we're going to be doing. But you could equally take in certain situations work with common shares or convertible instruments. But the preferred one is the one that gives the most protection to investors.
Yeah, and you mentioned earlier value haggling over valuation. How do you approach valuation for a startup business that say has no track record?
Mm-hmm.
Is there a methodology that you use?
Sandra, there are about 12 methodologies which we're going to be discussing with you. But it's an art and it's not a science. You don't have any revenue numbers. You don't have a track record, as you say. It's brand new. So the easiest thing is to sort of look at market comparables. Like if you have a company in a certain geographic location and say, okay, what are similar companies? What was the valuation they attracted from the market, right? The other trick I use is do a 10 times multiple, right? So if someone says I'm worth 4 million, then you go like, okay, can you grow into a $40 million company? Um, or if it's an $11 million valuation, can it be a $110 million company? Then you look at sort of what ownership do I get, right? So usually angel investors take anywhere between 15 and 30% ownership in a company, right? And then you have to think about the founders of the company have to sell another piece of that in the next round, right? So you look at sort of what is the amount that I'm going to get. Uh, uh, so say we're investing a million, 20, 30%, of the business, what then what the pre-money value is. So it's combining a few of these methods, the geographical method, the comparable method, the 10x, the percentage ownership. It's a bit of an art sort of to pull them together. Look at the industry sector, and you come up with a number. And I tell you honestly, 9 out of 10 times, there's pretty quick agreement on that when you do that. Like even I mentioned I had a meeting on Monday on this medical device company, and they said, "Well, we think it's going to be worth 8 million. We're raising 2 million." And I go like, "Well, based on where you're located, based on what you've accomplished, 20% to the angel investors, that seems like a fair number. It's not that difficult, but it's for founders, it's emotional, and
Yeah.
it's for angel investors. Angel investors always think they can get a better deal, right? But I'm going to demystify it for you, and it's not that hard at the end of the day. But it is art. Don't count on it that there's a set formula. That doesn't exist.
Yeah, and especially in our market where there are few deals and very little data to go on,
Yeah.
you know. So, what about the time horizon of the investments in your portfolio?
Yeah.
How long have
So
you
that
held them, and like how
well,
many exits have you had?
so we've had a number of exits over the years. I tell you, my first angel investment, I did that, I think now 23 years ago, right? And we're still waiting for an exit on that company, right?
You're
The
still
company was
waiting for
almost,
an exit.
yeah, yeah,
Okay.
yes, but they started to pay a dividend. So, like the last few years, we got a nice check coming out of the company, but they haven't exited, right? So, I always mention this because it's a long-term journey, right?
It
You
is.
don't, do, and people reading a newspaper of quick billion-dollar exits. These are so rare. I think you have to count on at least 7 years before you start seeing results. 7 to 10 years before you start to see real exits and successes. So if you can live with that, then fine. So it is a longer term journey, but then you can create pretty spectacular returns over that period of time. So that's where it becomes interesting. But it is a long term journey. We've had some smaller exits that went in 2 or 3 years, and they were not huge. They were like a 2x or a 3x. We have one company in the funds portfolio that's a unicorn. That's $1 billion company, but and we haven't exited from that yet. But they've been around for 12 years, right, before they hit that mark. So it's hard work and it takes time.
Yeah, absolutely. Um, and in your portfolio, Peter, how involved do you get with those founders? I mean, what
Too
percentage
much,
of them are you too much? I know.
too
I know
much.
the feeling. I know the feeling. Yeah.
I
I
sit
mean,
on.
and in what capacity? I mean, what do you do? Are
Yeah,
you a
yeah.
mentor? Do you sit on boards?
Yeah, that's a good question. So I sit on three boards, and these are very active board roles. So for one company, we've just done a venture capital financing for with a European strategic investor. So I get involved. I work with the founder. I help out. Uh, some companies I'm less involved, right? That's just a financial investment, and sometimes the founder calls me for a quick question. So it depends, but I tend to get I'm in very much in favor of getting a board seat from not from me necessarily, but from someone in our group who are part of the financing, so that someone can work with the company, and that is essential. So yeah, and people know me, so they know find me and they have questions. And whenever there's a problem or an issue, they call me, which is also what I encourage founders to do, right? Because there's a bit of this mentality to send out good news, like, hey, revenue is growing, we've hired some interesting people. But we really want to hear from companies when there's bad news, because then we can help. Like, you've got a problem, do we need to bring someone in? Do you need more money, things like that. So I very much believe in getting involved. And as I said, I think it's fun to do. So there's rewards, and you can get a better financial return if you're actively involved. But sitting on the board is probably the most sort of formalized way of doing it. Then you have an actual say. And then you are entitled to look at all the information in the company, all the financial information, all the contracts, etc.
Yeah. So let's talk a little bit more about boards and governance. What's a typical size of a board for an angel-backed company?
Yeah, it at the early stage. Look, there should be always a founder, one or two founders on the board to start with. So then you have maybe one or two people. Then you add an angel investor representative. So it's three. You like to have an uneven number, right? If you have to vote,
Right.
so it usually starts at three. Then if the company grows, there's a subsequent financing round. It grows to five. Sometimes maybe 6 to 7, but I think five is a pretty
It's
good
a good
size. And
number. Yeah.
yeah, so you have to have investor representation, you have to have the founder represented, and ideally, you bring on someone who has a certain expertise or a certain skill set. But ideally, a board member should be able to deal with any issue, whether it's a human resource issue, whether it's a go-to-market issue, a finance issue. You get tons of problems, like serious problems, and you have to sort of jointly work out and find a way to solve the problems. That's what you're doing as a board, and give the founder or the founder's direction in how to solve these issues.
Yeah. Yeah. So, in my own portfolio, I've seen founders and their companies do really very well. after I've invested. But there are a couple of founders who have sort of
Mm,
gone off the rails, you know. What
mm.
has been your experience like in your portfolio?
Well, we've lost quite a few over the years, and for each time that a company went down or the founder went off the rails, there was a specific reason. And I always said, let's spend time on that because something has gone wrong, and we don't want to replicate it in our next deal. So what we've done is that's a good thing if you do it for a long time. You learn a lot and you make a lot of mistakes, and you build up a base of knowledge. You won't make that mistake again. And I will be discussing some of these case studies with you when we would do the course, and they're quite interesting. So it happens. You try to get better, try to avoid them. You also have companies that are not successful and they don't fail, but they just sit there forever, right? They generate a bit of revenue, they pay the founder's salary, but nothing happens with them. So these are even more frustrating. It's like, well, do something.
We
Uh,
call those zombies.
Zombie, yeah, exactly. They're zombie companies, right? So we've got quite a few of those.
Yeah.
Yeah.
Well, I don't feel so bad then, Peter. I'm looking at my portfolio and,
Yeah.
I shouldn't worry so much. Um,
No.
yeah. So let's talk about exits. In our portfolio for First Angels, we have 12 companies, and there's been one exit. Is
Mhm.
that kind of typical? How do you work with your portfolio companies to position them for an
Yeah.
exit?
Yeah. Well, an exit, takes time, right? So sometimes it comes like at a very unsurprising moment. There was one company in that in my portfolio that did an exit during COVID, and they were negotiating a large financing in the U.S. with a strategic investor, and everyone was pretty excited. And all of a sudden, that strategic investor said, "Well, we're just going to buy the whole thing," and it's like,
Yeah.
well, no one was expecting that. So sometimes these things are quite unexpected. But preparing them is of course key. It's sort of executing on the business plan, making sure that you got a whole data room, that you got everything organized for when the moment comes. Because I've seen companies scramble when there was an opportunity to exit, and their financials were a mess. They were struggling to get it right. So, but you should do that anyway. So, by running a very mean and lean business that's well organized, you are positioned for an exit anytime. Um, most and I mentioned that company that I've been in for 20 years. And most things we think we can create more value over a longer period of time. So it pays to sort of take extra time and find the right exit rather than do a quick one and take your money off the table. So it comes back to patience and working with the company. And once you get into an exit scenario, it comes down to like, okay, if someone who wants to buy the company, who else is there who wants to buy the company, right? You want to create a
Yeah.
situation that's more suited for a company so you can maximize the value
Right.
for
Your
all the people
value.
involved.
Mhm.
Yeah, yeah.
Yeah. When I do workshops on angel investing, one of the topics that invariably comes up is, if a founder isn't performing,
Mhm,
what happens or what
mhm.
should happen? What's your experience been like? Have you ever had to, um, push for a founder to be fired from his job
Yes.
as
Oh, yeah. Oh, no.
CEO?
That happens quite a bit. It usually happens when there's a large VC financing, right? Because at that time, a company is no longer a startup. It becomes a mature company that needs to grow rapidly. That has a far larger team. It may have geographical subsidiaries. It is a different skill set, right? At that
Yeah.
time, it can no longer be the scientist. I've had actually, this was this company that I'm so invested in for so long. It was run by scientists, and it was a unique technology at the time, and they did very well. But the point came that the two founders were had to be sort of gently put aside, and they could retain their shares, and they still benefit from having a very valuable
Right.
ownership. But they were scientists. They were not people who could run a company, and sometimes these founders will accept that and see it and say, okay, I'm going to take a step back. A lot of them indicated when they're doing the financing, like, I realize I'm going to take it to a certain point and then I'm going to step back. Sometimes they don't want to do that, and then it becomes a bit of a battle and it becomes unpleasant, and that happens too. But it's again, it's a regularly occurring thing with companies as they grow. In fact, the unicorn that I just mentioned, the founding CEO is stepping back and they're looking for a new CEO who has the skill set to take the next step. So it's almost like a natural process for most companies.
Yeah.
If you have a founder who can be the scientist, the person who starts it, grows it, $200 million all the way to exit, that's rare. If you can find someone like that, you should always invest in them because it's unique.
All right. So I think this has been a great conversation, Peter. And maybe we could end by just asking you what can folks look forward to in the upcoming webinar series?
Yeah, so as I said, what I'll be doing is I'll be taking people through the entire journey from the early days of an investment, how to go about it, all the way to exit, and all the ups and downs in between. And I'm going to give you a lot of case studies of things where that have gone horribly wrong, real dramas, lots of money's lost. But I'm also going to present you with some really big successes. And we'll try and focus you on sort of what can you learn from each situation and how can you apply that in your deal. And it's equally relevant for investors and as founders to understand, And I was in Jamaica exactly 7 years ago for the first time, and sort of when I did
Yeah.
my presentation, it has really evolved. What we've learned over the last 7 years through the market's ups and downs, the exits, the new investments. There's a lot of new material, and it's going to be a lot of fun. It's going to be quite interesting, and I'm really looking forward to share all these stories because I keep learning, and it's fun to share it with others.
Yeah. And I'd say we're very fortunate to also have some angel investors from other markets, but
Mm.
contributing their experiences. People like
Yeah.
Tommy Davies, who started the Lagos Angel Investor Network and the Africa Business Angels Network. Tommy is legendary in the angel space in Africa. And then there's Israel Pons, who does a lot of work in angel investing in Latin America and actually hosts the Pitch at the Beach series. So I think it's going to be great having you, Peter, share your vast expertise and also having some of our local angel investors from First Angels as well. So I want to thank you for sharing your vast experience with us today, Peter. I know we've just touched the surface of the topic on
Yeah.
angel investing. I just hope that we'll have a really rich, engaged audience to hear you speak. So thank you so much.
Thank you, Sandra. Looking forward to see you in a few weeks' time.